business, what they've created. Well, Abhiram Eleswarapu is head of India equity at BNP Paribas. He's joining us now. Abhiram, good to have you with us here. Thank you very much for your time. Let's just... I'm going to start by asking Abhiram, have you increased focus on mid-caps and small-caps? Just institutional coverage. Do you have a fair bit of requests there? Because that's the part of the market which is doing so well, right? And it's not for nothing. Results are coming. Companies are doing well. And the thing is, a lot of themes, you can only take exposure through these smaller companies. They're not there in the large cap space. So that's the other thing. So just wanted your thoughts there, Abhiram.
Yes, indeed. Actually, we have got a lot of inquiries on mid and small caps. To be fair, since around February, March or so, I'd say that investors have put in disproportionate interest or attention towards these mid and small cap companies. And to be fair, they're up, 25-30%. And I was looking at the Nifty itself was probably up in single digits year to date. So there's also been significant outperformance. Actually, there's, in my view, at least a couple of reasons why that may have happened. First is that India is obviously being seen as a structural story. I mean, those credentials have become much stronger year to date. And investors are looking at multi-year stories, which they can make multiple returns on as multi-bagger ideas over the long term. And as a result, they're starting to look much more at the periphery in India, whereas the larger cap names, obviously, the stories are very well known. And the second bit is there's been a lot of domestic money that's come into the market, and that tends to obviously flow into much to smaller names where the understanding there is probably quite good. As a result, for us also, we've started looking a lot more at these names. But that said, I also sound a word of caution going into the second half of the year. Just given the significant outperformance that we've had so far, I would assume that between now and the end of the year, investors are probably much better off increasing weights in the larger names.
In the larger names, would power feature as an interesting theme for you to bet money?
At a broad level, we're looking at four major themes. The first is Affluent India, and that will include, higher-end consumer, pharma, healthcare, etc. Second is financials, which have obviously not performed as well as we thought, at least the banks. The third bit is IT, which started to improve since the last time we met. So that's three of them there. And the fourth is capex, especially government, defense, railways, that kind of thing. So capex is the fourth theme.
Very interesting. So Abhiram, hi, good afternoon. Let me start off with the first one, Affluent India, because we're seeing at least, those of us who are here in Mumbai or in Delhi, they're really seeing the rise of this affluent Indian, consuming class. So, I know you won't talk stocks, but then how exactly are you looking to play it? And within this theme, are you looking more at large cap names, or are you willing to go to, level 2, level 3 and actually look at mid cap themes here?
Oh, we will look, we would like to go a little deeper and look at smaller and mid-cap names as well. But at the moment, our focus is on larger names because, in fact, to be fair, this was a report that just came out today where we looked at this. There are a couple of elements why Affluent India. If you see, the formal economy is actually doing very well. You see GST collections, for example, were pretty good. And if you see the latest tax data, the kind of population that's moved to higher tax brackets has been extremely strong. And that tells you that the formal economy is in pretty good shape. I'm not sure I can say that about the informal or rural economy, but I do see there are some headwinds. So how do you play this? You look at companies that sell premium items. So it could even be consumer staples. But if that is the case, then you're looking at those that sell higher end products, so to speak. The second bit is you look at healthcare, where today, the population is more than happy to spend on preventive care, on higher-end surgeries, etc. So hospitals is a theme, diagnosis is a theme there. Or else you just go out and look at financial instruments because the richer you get, obviously you want to place those with banks or invest in the market, etc., etc. So and banks are a beneficiary of that theme. So that's the way we're looking at it.
Hi, Abhiram. Good afternoon. I recall we had this issue with EPAM, EPAM, they had come out with a guidance and the street was a little bit disappointed. And you said you look at the IT companies positive with a longer time frame, I think. So you said maybe some part of the bad news is already in the price. What's your view on tech from here on? Because that index clearly has been very, very strong. Do you think there's more to go from here, or would you buy it just for the longer term?
I think there is more to go, and there are a couple of reasons why. If you take the last quarter results, admittedly revenue growth wasn't great, but deal win momentum was quite strong. So at least from what we counted, deal flow was up something like 13% year over year, even as revenue growth was probably in low single digits on a year over year basis. So clearly something was brewing there. Companies were winning deals. As so also happens that Indian IT companies may have benefited where companies based elsewhere, for example, in Europe, may have struggled because of the political situation there. In addition, I think investors are paying undue attention to, let's say, U.S. macro data. For example, if you look at U.S. manufacturing, it's still in contractionary territory if you go by ISM. But deal wins and that data actually decoupled somewhere early this year. U.S. services ISM, for example, is still very strong. So I think investors are focusing on a broader set of data rather than looking at the ones that may have been more relevant for the sector. And if you look at that and spend more time on that, it does appear that, to be fair, in the second half, you could actually see a pretty good recovery in terms of revenue growth as well.
You spoke about railways as one of the themes when it comes coming under the broad brush of capex, right? Defense and railways. Railway stocks have gotten re-rated. Will you look to book profits? Are you getting a bit cautious here? Any signs of overheating according to you?
Well, actually, I'd say this for the entire mid and small cap space going into the second half of the year. I would be a little more careful because the mid and small cap indices are actually more expensive than the large cap index. If you take a look at the Nifty today at 18 times, it is not exorbitantly expensive. It's probably only about 3 to 5% higher valuation than what it has been in the past 5 years or so. So I think large caps is probably where you'd want to weight your portfolio a little bit more. And also bear in mind that as you go into the second half, especially when you're talking about capex names and government capex, and obviously there's long-term story there, but it also may be the case that some of the capex may have been front-loaded, considering that we are heading into election year next year and things automatically start to slow down towards the second half of the year. So I think now is a good time to kind of rebalance the portfolio, start to think a little more safety and expect returns to be a little more moderate.
Okay, all right, Abhiram, good chatting with you today. Thank you very much for joining in with all those ideas in that context. That's a word from BNP Paribas. We do have to take a quick break with the news. The market's actually moving along quite nicely, and should watch out for tech stocks. There's a lot of buying that's picked up in the frontline tech names. Look at Wipro. It's up 4%. Now, that's a move you can't ignore, 4.25% actually. HCL Tech, TCS, Infosys, all the large cap IT boys, they're seeing lots of buying today. So very interesting trends. In any case, a lot of these stocks have completely sort of washed out or wiped out whatever losses we saw immediately after the first quarter. For instance, if you pull up Infosys 3-month or a 6-month or a 1-year chart, then the decline that we had at the end of Q1 and the disappointment that showed up in stock prices completely evened out in the subsequent 2.5, 3 months. Interesting, as the next trigger for the market obviously is going to be the next earnings season. And now we will, that's what I'm talking about. You see that decline on Infosys. Now with the stocks rally in the last 2 months, it's practically getting back to those levels. Interesting moves and recovery in IT. Quick break on that note. We'll come back on the other side and tell you what dealing rooms have been buzzing about today. Nimesh will join in with the D Street chatter. And of course, then some trading ideas coming up with Mitesh as well.